Okay, I wanted to do a quick natural gas futures analysis before the regular trading hours start at 9 a.m. Eastern Time. Just going back to yesterday's analysis, we've seen this pop in price before the regular trading session started. However, I had talked about in the video yesterday that prices needed to get above various moving averages on various time frames, which served as dynamic resistance. Um, Prices could not get above those moving averages, and so we saw a reversal occur at roughly 925. I did see the reversal pattern, but I did not get in. Fast forward to today, we can see that overnight was pretty much flat until roughly 6:30 this morning when we started to get some movement and volume. We can see a trend line break at roughly 8:05. Now if we zoom out to the daily chart, what you can see is that yesterday's close was above the 50-day moving average. Price did pull back. That 50-day moving average served as resistance, and price is now declining. There's still room, at least on the daily chart, until $2.18, where there appears to be some buyers. Right, this is the origin of the strong leg up that took out the pivot highs to the left. So prices may pause around the 218 level. If we scroll through all the different time frames, you can see that the 8-hour time frame is bearish. You can see that the 4-hour time frame is bearish, making lower highs and lower lows. Now there is a 4-hour buy level here, but it's weak. So I don't know if that price is going to reverse at this level or not. If we look at the 2-hour chart, this was the move I was referring to yesterday. As you can see, price pierced but didn't close above the 50-day moving average on the 2-hour chart. Again, on the 60-minute chart, this was the false breakout we had. All right, so I'm going to go back to the 5-minute chart. Prices were range bound as the institutions were building up a position, and we can see that price did break down. Now you can see this level is reacting to the 4-hour chart. But that could be just short-lived. Now today we have the Natural Gas EIA storage report. This is coming from FX Empire. The report is going to come out at, I believe, 10:30 Eastern Time. The EIA weekly storage report is expected to show inventory increasing by a larger amount than usual. Consensus estimate is for a build of 106 billion cubic feet, Weak demand in a slow economy is unable to keep up with still high production rates. Yesterday, futures fell 3%, despite forecasts for warmer weather in mid-June that would increase air-conditioned demand. Again, the declines in natural gas prices is not only a domestic issue, but a worldwide issue. As you can see, includes various factors, including record U.S. output, a decrease in gas flow to liquefied natural gas export plants due to maintenance, an increase in exports from Canada following production disruptions. Data from Refinitiv indicates that the average gas output in the lower 48 states has risen in May, surpassing the previous record of 101.4 billion cubic feet per day in April. Now, meteorologists project that the weather in the lower 48 will remain mostly normal until about June 10th, but will turn cooler and more seasonal from June 11th to the 15th. They do anticipate U.S. gas demand increasing roughly 3 billion cubic feet per day, but not enough to for the bulls to come out. If we go back to the chart, as you can see, this 5-minute candle was green, turned red. Let's look at that level on the 15-minute chart. Yeah. So we did have a huge spike in volume. Okay. This was the huge volume candle right here. This is why I call it a weak 4-hour level. I mean, it's not bad. The volume's okay. But this candle, you had more volume. So we have 20 minutes before the regular trading session starts, which is at 9 a.m. Eastern Time. Not sure if I'm going to play the opening. I still have to respect this zone here, so there's no profit margin to the downside. Let's see what happens. What may happen is that prices will go higher right into the EIA report to just go lower. Potentially on huge volume, breaking this 4-hour demand again, as there is room to the downside on the daily chart. It's roughly 218. Let's see where that 4-hour chart is, the zone. Just below. So I'm going to look for other markets to trade that have a better reward to risk ratio. Thanks for watching. Subscribe, please. Like the video.